What is going on, Wolfpack Nation? It's the Wolf. Happy Sunday. Hopefully everyone's enjoying their weekend, spending a little time with family, but we also believe that the weekends are time to create separation from the competition. So we hope you're spending a little bit of time at the desk as well, and maybe we can accelerate that today with today's lesson. We want to just briefly go over some basics. Let's get back to the basics. So today's lesson, we want to talk about the consolidation versus expansion phases. Now, there's only two phases to the market: consolidation phase and then the expansion phase, relative to the breakout or the breakdown, or price discovery. So let's just go ahead and jump right in. It should be about a 10-minute lesson. So today, let's just go over EYES. It's a previous runner in play. So here you can see on the left, we are looking at historical liquidity deposits. We personally at Wolf Trading use the 3-year 1 day, unless if all parameters are met. We won't go into too much detail on that. Let's focus here on the 1-minute chart. So we're going to look at the 1 day 1 minute chart. And whenever we gauge or grade extensions, we want to use the 1-minute chart. And the reason for that is we're trying, basically, when we grade an extension, we're looking for emotion first. The emotional tolerances of trap shorts, if we're talking about an expansion to the upside, which we generally grade on the upside because we're predominantly short sellers at Wolf Trading. So when we see an expansion to the upside, we're looking for emotion. Emotion first, range second, but basically we're looking at the density of the consolidation in relation to the breakout in the expansion phase. Now let's just go ahead and zoom in on this chart a little bit here. So again, we're using Thinkorswim for our charting technologies. So again, when I click the mouse wheel, you're going to see a little toolbox come up, and then I generally check the trend line. So let's go from the bottom. This is Friday's chart from 5:30 up to the peak here around 693, 695. You can see that this is a 30.9, so it's roughly a 30% extension. Now that lets me know at best, there's going to be maybe 2 or 3 extensions in there. So we'll go over extension grading in a second, the parameters. But this is a 31% frontside move. So I just want to check that briefly. And now let's just go ahead and we'll mark off the consolidations. So you can see there's a consolidation phase here. Here's a flag or a consolidation. We're not really going to go over patterns, but let's just simplify things. We just want to look at the consolidation and the expansion. So here's a few of the consolidation phases. Now here's a consolidation. This is the high of day consolidation. We recognize this as a tier 1 consolidation, being the upper tier 1, tier 2, tier 3, and etc. But basically, when we're grading extensions, generally we're grading breakout consolidations on the front side. So let's go ahead and zoom in even more. Let's enhance. So here you can see, let's grade this extension. So when we grade an extension, we want to use the 1-minute chart, because basically we're looking for emotions, and what we don't want to see. The enemy of the extension is the pullback. Right, the enemy of the extension is the pullback, because what happens when an asset pushes and then pulls back, it gives the opportunity for trap shorts to exit, as well as longs or uptick liquidity, the opportunity to fight for price and get a better price. And that's not what we want. We want to see a top-heavy push. When I say top-heavy, I'm talking about exponential volume. This is early in the open, but we want to see volume, exponential volume. The volume structure maybe here on this upper day consolidation. Let's take a look at this one. As you can see, the volume is starting to grow to the upside, which is what we like to see. This might not be the best example, but let's just go ahead and grade this extension. So from this instance right here, we want to start at the bottom of the initial breakout candle. So we're going to go ahead and start here at 543 up to the top phase right here. So this is a 12.84, so let's just call it 13% extension off the consolidation. Now here's our grading. Let's take a look at our grading parameters. So here's our parameters, an A plus extension, and we see this maybe 2 to 3 times a week, but we're looking for that parabolic extension. That's in our opinion, that's a minimum of a 30% move with slight pullbacks. Now there can be micro pullbacks on the tick chart or the 5 or 10 second charts, but when we're looking at an M1 chart or the 1 minute time frame, we don't want to see the pullbacks as mentioned for reasons earlier mentioned. We want to see an emotional push 30% into resistance. That would be an A plus setup. When we grade our setups, we use multiple parameters. So we grade the historical liquidity or predictive support and resistance, right? So we grade the resistance and then we grade the extension. Here's an example of, I believe OCGN, I'm not exactly sure, but these are some C grade extensions based off of the emotional tolerances of the push. Again, we want to see, and also when we grade extensions and when we grade resistance, that gives us a setup grade. And basically what we're looking for is a setup grade, independent setup grade, so that we can get into our sizing parameters. Now, if we can, rarely do we get an A plus setup, but when we do, we want to go full size on that. An A grade setup, in our opinion, we like to size in 75%. A B grade setup would be 50%. Our recycle entry, if we won't get into core trading on this lesson, but when we do get into a core trade and we're risking off of intraday liquidity, that would be a B grade setup. When we get into a core trade, we never want to get as large as the initial entry, because again, we're risking unrealized profits, or if we carry up on a core, we're carrying up unrealized profits, but we're also risking realized profits that we locked in. But we never want to flip a core trade red. And a C grade setup would be 25%. Anytime that we buy strength or sell weakness or a chase, that's automatically a C grade setup. So we never want to get large on those types of setups. But this is just a little bit about how we approach sizing, how we approach parameters of grades. We try to keep things very systematic at Wolf Trading. Let's just go ahead and go back over to the charts. So let's take a fresh look at this again. So 13% on this first extension here. We're going to give that, based on our parameters, we're going to give that a C+. Let's just go ahead and mark that as a C+. Now we want 15% to be a B grade, but it doesn't look like we're going to get it there. Again, on the 1 minute time frame. Now let's go ahead and observe the next extension. Now you can see the next extension has a far greater density of consolidation, but a smaller expansion phase. That's not what we want to see. We want to see the exact opposite of that, but we can go ahead and measure this as 7%. That's not even a gradable extension in our opinion. So now let's go ahead and go up to from the expansion from tier 3 to tier 2. Again, looking at the volume on the bottom. How much liquidity is inside that consolidation? The larger, the more dense the liquidity inside the consolidation, the greater potential that consolidation has for explosive or continuation on the expansion. So again, we're going to go ahead and grade this one, starting from the low of the breakout candle to the high before the pullback on the M1 chart. Again, this is only 7%. Let's go to the next. So from tier 2 to tier 1 expansion, here is again just 5%. So there's really no short plays here, in our opinion. Now this example was chosen specifically for that reason, because we don't want to short every single push. We don't want to short every single extension. Now, none of these extensions go into our higher time frame resistance. If we take a look at our higher time frame resistance on the left, this is a 3-year 1-day chart. You can see our levels, and let's go ahead and zoom in on some of this liquidity here. But basically, we look for liquidity imbalances on the higher time frame chart, or HDF chart. We're looking for areas where the larger players have historically rejected price. And you can see here, let's zoom in on this consolidation here. You can see that we have an upper LVN or low volume node at 990 and a lower LVN at 874. So these are areas where the larger players have held or rejected. And again, it's our opinion at Wolf Trading that these manipulated assets are traded predominantly by larger participants, and we consider them to be in-house liquidity, and they're basically counterflow trading retail or outside participants such as ourselves. Right, so our opinion is that when we trade manipulated assets, we want to position play these assets in such a way where we can trade alongside the larger players. Similar to like a pilot fish. You see a smaller fish that kind of swims around with a shark or a whale, and they kind of feed when the larger entity feeds. That's kind of what we like to do. And again, we don't have piker or scalper mentality at Wolf Trading. We track the larger players and we position play assets. Let's go ahead and go into a few more slides. So here's an extension that we graded at C+. Now you can see this. Now we'll get into the plus or minus. Again, this is operator discretion. But on this extension play here, you can see that the consolidation phase here was very minute in relation to the extension. So there's far greater liquidity in the expansion phase in relation to the consolidation phase, right? That generally shows us that the larger entity or larger participants are trapping liquidity. So if we see a push or aggression towards the supply, right? So you see aggression here towards the supply, that means that they probably have supply trapped. Now this is just an opinion, but this is how we look at the larger participants. We want to find motive. What are these larger guys doing? Let's go ahead and roll next slide. Here's an example of semi-teleportation candle, but this is a 31% move, and again, this happened very, very quick, within 3 or 4 minutes. So this is not the ideal extension, but we'll take this. I mean, this is something that we're looking at, and you can see the red band up top. This is how we mark short-term liquidity. Short-term liquidity would meaning from a day one liquidity event to present, such as an asset like IHT or OCGN. These assets had multiple day runners. OCGN had HC Wainwright on it, and there was fundamental motive on that play, but IHT was like a day 4, day 5 play. So HTF resistance we placed the most respect on, and again, we used the 3-year 1-day chart. But whenever that's number one respected liquidity, historically speaking. Then we go to short term from the day one liquidity event to present. Then we go to multi-day. Multi-day is, we generally, when we're trading assets, we use the 1-day 3-minute chart, because we like to include yesterday's liquidity, especially if it's a day 2 play. If day 2 play and the asset starts to fade, if we have a strong day 1, we want to include yesterday's participation liquidity into that. We believe that, like, especially in relation to the point of control, we don't use too many indicators. Our charts, I've noticed over the years, we've been trading very passionately since 2018, that the charts are getting more and more naked, because we're starting to educate and realize the importance of real-time data analysis. There's no like, in our opinion, there's no edge in moving averages or VWAP. This is our opinion, but basically, if there is a tiny bit of edge, say VWAP, a lot of participation on this indicator. There's a lot of participants that use it. We don't just get long if the asset's above VWAP or get short on the retest of VWAP. The edge comes from the analysis of the addition of the participation there. So if a lot of retail traders are using VWAP, then the edge comes in the analysis of that additional liquidity. Like, we want to see what is the larger player doing in relation to this influx of liquidity. Some larger social media participants are blasting out VWAP, and we can see that there's an increase in volume at these levels. Then we want to analyze how the larger entity treats that liquidity. And this is just our opinion. But again, our charts are fairly naked. What we do like to use is some indicators. We do have some indicators in the room. Real quick, we'll go to the Wolf coaching room. We do have some indicators here where we look at we look at data in terms of relativity. So we like to look at consolidation averaging volume in relation to the breakout or the breakdown, and we use the term of aggression on that. So And we like to look at the average volume versus the aggression volume, and that gives us a relative ratio of aggression level. So when we see like 2, 3, 4, 500% relative aggression versus the consolidation support or resistance, that gives us leading information. And we believe that there's really, again, there's no edge in these indicators. The edge comes from the real-time analysis of this information. We believe that if you can consistently and quickly analyze real-time data, that's where the edge is. So again, here's some indicators that we use at Wolf Trading. The Wolf Trading introductory video explains how to add that. And again, here's some videos that we have made just over some assets that we've traded. ANVS, we caught this one nicely with a 96.25 short average, not taking profit until 75, and 76.26 was our first target. But if you're interested in learning more about how we trade, here's the Wolf Trading room. We like to we're very analytical and systematic. We like trading mechanics, but we do analyze overhead resistance. So we use historical liquidity, as mentioned, to predict future areas of support and resistance. But again, we need to use real-time data analysis to confirm or deny that thesis. But at Wolf Trading, we've found a way to confirm or deny trade theses on 10 to 15 cents, which is phenomenal in our opinion. And that offers a really good risk to reward ratio. I think I have some data on that. Yeah, I do actually. Here's our currently we have a 14.26 profit factor. So we're on a 69.7% win rate. So again, we're just showing you that we're not really we don't have a scalper mentality. We're looking for the larger move. And if we can accurately predict the reversal points, trading alongside the larger participants, the institutions, the market makers, the algos, the riggers, many ways to describe these guys. But if we can trade alongside them, and then basically we buy support and sell resistance. So if we can buy support, we're just going to hold the asset until the chart, historically the chart will tell you where support is. So we don't cover based on range or based on P&L. We trade based on historical support and resistance. And again, those areas need to be confirmed or denied. We also trade derivatives. Here's what we're holding right now on AMC. AMC has been in play for long. It's the main. Everyone has eyes on this asset, but we're selling 65 and $80 call spreads. We're new to options. All these are defined risk strategy. These are vertical call spreads, credit spreads, but this is new to us. We're just getting into derivatives plays. But again, these are all defined risk, which you can trade in an IRA, Roth, or simple. Again, we believe that the Greeks or delta and theta, these are, and especially implied volatility, are helping us to really understand the underlying assets a bit more. There's a lot of information inside the derivatives world, and this is new to us. But again, here's a quick just rundown of the room. The runner's room, lastly, aka the weapons room. This has been a very valuable tool for us as well. We track the runners every single day. Let's just say if an asset is running in the upper right hand corner, I can search just specifically the runner's room, and let's say MBIS is pushing in pre-market. So I just want to get an analysis real quick. Here's 14 results on just this one ticker. Again, going all the way back to 5/5/20. We started this room was established in 2019. But again, if I just want to see how the asset has run or has ran previously on what relative range, here's also the front side volume structure as well as the volume. Very powerful tool here. And again, the search box in Wolf Trading is also a very strong educational tool as well. Of course, this is just our opinion, but so this is a couple things that we have to offer at Wolf Trading. Now, I don't want to turn this into a commercial, but I really appreciate your time, guys. If you have any questions or you want to reach out, my DMs are always open. And if you want to get in touch or interested in learning more about the Wolf Trading Discord server, contact information is below. So thanks a lot, guys. Enjoy your Sunday, and we'll see you soon.